Welcome to Insights. I'm Eric. Thanks for stopping by today. We're going to do a short report update for the dollar index, mostly just because the price action and what's going on in the real world. I know we've been getting a lot of emails and communications that the dollar has been is ready for a top, and I don't want to go over the last report that we did just a few update that we did a few days ago. It still holds and valid. This is just a warning, and this is an open warning for everyone who's participating in this report, and for everyone who's considering joining up with it or just even watching along on the matrix, wondering what the heck is going on. The dollar is primary trend is up, and it's 13 months up. It's now 16%, and it's probably going to go up a little bit more after today. That's a whopping return for the dollar index for major currencies. In here, the rest of the forex that we track. Some of the other ones, the euro, the yen, they're down a double digits as well, and down a lot. This is a staggering move. This is the precursor. This is the setup. The dollar is being driven higher by capital flows as it flees the periphery economies. This has nothing to do with interest rates. Interest rates are one component of a broader equation. They are important to some degree to set things up. But when you have a panic to get out, panic before the collapse as the debt starts to go under. We've talked about this before in other reports. I think we've breached it before in this one, or we breached it in the economy and stock report that's still ongoing. We've talked about the enormous debt burdens that exist not only in the United States but also in the rest of the world. They are staggering, and as the dollar goes up, the foreign debt that's out there that's denominated in US dollars to save some money during the good times, it's becoming difficult to service that debt as the dollar rises, and the host or the local currencies that it's denominated in that they have to factor it back into continues to drop. The service payments are going to become crippling to the point where they are going to default or they are not going to be able to do it. The Fed can only handle so much, central banks can handle only so much, and then eventually the whole system seizes up, and we are heading towards that point. They are going to try and hide this, but you have to understand what the message of the market is saying and what the invisible hand is doing. It's going to press this trend to the extreme. Let's take a look at a few of those. Again, this is a short report. It's not going to go into the detail of it. We are now a late cycle. That's the composite designation for this one. This started way back and was a reset 14 days ago. It was early. You can even look at how good the reset has been. This reset has generated a 4% return since it turned up on 8/17. Again, it continues to grind higher as well. This hasn't been fully updated even throughout today. The entry point at that time was 28.53, and I think we're 29.55. We're not fully updated on the rest, but a 4% return on an impulse is a lot. You can see it right here. This daily impulse, which is 14 days old, has a 1.2 time cycle for the daily trend. Anything above 2 is pretty noticeable. This is pretty big. That's why it's bolded red or red. It's not bolded because it's not statistically extended. But the time of 14 days is not very old. This is just moving very quickly. And that's eventually it's going to reach some type of profit taking. But don't try and time it. I mean, you have to wait for these cycles, and the cycle of time is just as important as the cycle of price. Got to get this above 2.5, and then you can start taking some money off the table. It's surprising how many people rush to take money off the table when the cycles are not that extended. We do have some extension on the weekly. It's been up for 62 weeks. That's a 1.5 time cycle right here. 1.49 is 1.5. And the price cycle, which is fairly sizable, if we look at here inside the matrix, you can track all these impulses. It's 18% on the weekly all by itself. That's 2.4. That's pretty high. These numbers can get a little higher on the weekly time frame. 2.5, 3. They're not going to go too much further before there's going to be some sort of correction, some sort of consolidation. Will probably catch everyone off guard. What we are watching is the primary trend. It's got a time cycle of 13 months and a minus zero point 0.1, which means this is not a very old impulse. The price cycle is 1.5, and we can look at the lead W here and see that The UUP, which is right there, has been up 16% on the monthly. So this is pretty coordinated. This is pretty good coordinated rally. I got to get back to where we were. It's 1.5. This is going to reach 2.5 before this probably tops out. And the question is whether it tops out or the system collapses. That's a good question. Even into a real panic, this could push as high as 2.5, even 3, and then the system's going to seize up. We'd like to see this go a little bit slower and get drawn out in terms of time, but you have to respect this. And what you have to also watch and hear, we talk about inside the report, and you can watch it in the matrix. We track the euro, since the euro is about the dollar index is about 60% of the euro dollar trade. It's important to watch those cycles as well. But the whole point of this discussion is I know there's a lot of people who want to call tops in this, and I would suggest, well, look at the cycles. I mean, if we look at the daily, there's nothing that's screaming out. If we look at the weekly, there's nothing screaming out. A little bit here, but that's the first point. If you get this at 3 and this at 2, these are pretty extended readings. The real question is how does the euro stand within this as well? But again, you're not going to probably get profit taking until the daily reaches at least 2, and these time cycles get pushed out here. So don't try and push this. Watch these reports. I know people are tuning out as the pain is ratcheting up. I know there's a fair amount of people who are following these. I mean, I beg you to keep watching them. Eventually, we're going to have to walk away from the dollar, and you're going to have to do that when it's probably almost impossible to want to do that. You're going to want to stay because everybody and their uncle is going to be into this trade, and you're going to have to step away because you're going to get a liquidity crisis at some point, of which we can go down here and we can track this as well. The whole point of this stuff, though, is to watch these trends and to play it by the numbers, and that's what I'm trying to reinforce. Don't follow the dollar trend by the gut. Follow the invisible hand, use the computer, use the matrix, and watch these reports. If you have any comments or questions, let us know. Keep tuned, keep watching, don't be afraid. The best thing you can do is be prepared. If you're not prepared, well, then there's nothing to be afraid about because you're just going to go down anyway. So that's not a great way to end this. I suggest being prepared. Being prepared is having the trading discipline. We use the evolution of the trade. That helps us out. We use time cycles, price cycles, energy builds. We find out if the professionals or public are buying, and we find out when the trend is not stable. Come join us with these reports and don't tune out.